Welcome everybody back to the channel. I am sitting here today with Christian Diaz from Guaranteed Rate. They are actually in our office here, and we are going to talk about LLPAs. I see them on YouTube all over the place. Hear a little bit about it in the news. Probably not enough in the news yet, but this is a pretty big deal, both for first-time home buyers, as well as just any conventional loan buyer who's thinking about buying a home this year.
That's correct.
All right, so let's talk first is, what is an LLPA?
Great. It's a loan level pricing adjustment.
Okay. What does that mean?
Yeah, in a simplicity, it's just an adjustment, a charge, a cost for the rate, right?
Okay, so it's not a rate increase necessarily.
No.
It is a cost that a borrower pays to get a certain rate through a conventional loan. Exactly. Which is basically a Fannie Mae, Freddie Mac loan.
Yes. Okay. So, for example, if you have a $500,000 loan, right, that you're trying to finance, and it will cost you 1/8 of a point, right?
Okay.
To finance this specific loan.
Okay.
Because of this LLPs or loan level pricing adjustments, that would actually be $625 extra on top of your closing costs.
Okay. So let's clarify that for everybody. Yeah. It's not 1/8 of a point rate increase.
That's correct.
It's 1/8 of a point. So it's 1/8 of a point of the loan amount that you pay at closing.
Yeah.
Okay.
So if your approved rate was a 6.75, let's just say, right? Your interest rate won't be increasing an extra 1/8 of a point, which will put you from 6.75 to 6.875. That's not what it's doing.
That's not what happens.
Charging 1/8 of a point, which is $625 to that specific rate.
And you pay that at closing costs.
Exactly. Increases your rate.
Okay.
Or your cost, I'm sorry.
Okay. Now these are, again, only affecting conventional loans, not government-backed loans, not FHA, not VA, not USDA. Those don't apply.
Only Fannie Mae and Freddie Mac loans.
Okay. Sounds good.
Which is conventional.
Okay. Now, you kind of brought up the point of, it's a cost that they pay at closing to get a certain rate.
Yep.
But my understanding is these LLPs can kind of stack up.
Yep, they can.
And really add up into the thousands of dollars. Yes. Now, do people have to pay that at closing, or is there another option?
So if they don't have the money, right? If someone says, I only have this much money to pay the down payment and also the closing cost, and your closing cost increased an extra $3,000, $4,000, $5,000.
And that's realistic.
Yeah, that could be realistic, yeah.
Okay.
Based on the type of home it is. Could be a manufacturer, condominium, your credit score, right? A lot of different aspects, debt to income ratio. So let's just say all this stack up, and then you don't have the money for closing costs.
Okay.
The lender could increase the rate a little higher to consume that cost. Okay. So if your qualifying rate was 6.75 again, the lender can increase it to 7% or 7.25 to consume that cost.
Okay.
Instead of you bringing it from your own pocket.
And is that a fairly reasonable number? I mean, to go from
roughly
6.75 to 7.25?
Yeah.
But it's not a jump from 6.75 to 9 or something like that.
We're looking at about a quarter, maybe a half a point increase.
Okay. So
to the rate.
To the rate. Okay.
Yes. That's when we talk about
if you do not pay it, the
cost.
The cost at closing. Okay, sounds good. So LLPAs have always existed with conventional loans because the government is not backing these loans like the other ones.
Yes.
It's actual investors, banks and things like that.
Yes.
And they want some assurances, kind of like, I guess, car insurance.
Yes.
If I buy a Ferrari,
which would be nice.
It's on the bucket list. If I buy a Ferrari and I have bad credit, some wrecks, missed payments,
whatever it is,
I'm going to pay more than someone who's buying a nice little Hyundai 4-door and has a clean record.
Or a van, a minivan.
Or a minivan.
Let's just say.
Yeah. Okay, so that's a comparison.
Exactly, yeah. So you're going to be paying more based on your record, right?
Okay.
And that's the same thing for a borrower based on their credit history, their debt to income ratio, what type of property they're buying.
What county it's in.
What county it is, All those things will pertain to the LLPAs.
Okay. So they've always existed, but there's something new brewing.
Yes.
And it's good for one group, really not good for another
negative
group.
for another one.
Okay. So what is the change?
So, I mean, really is catering to first-time home buyers, right?
Okay.
Let's just say you and I are buying a home, and you already own your home. You sold it. You made this profit, and you're going to invest it into a new home, right? But let's just say that as a first-time home buyer, I'm buying the exact same home that you're buying.
And do we have the same credit?
Same credit, same income, same everything.
Everything is the same.
Yeah, everything.
Except you're first time.
I'm a first time.
And I've owned a home for the last 10 years.
Exactly, 3 years, because you're considered a first-time home buyer if you haven't owned a property in 3 years.
But I mean, let's say I've owned and made my payments for the last 10 years.
You had a great history and everything, yeah.
Okay.
So we're both going against each other, trying to buy the same home, I guess, let's just say.
Yeah.
By default, I'm going to have a better interest rate for first-time home buyer. I don't have to put as much money down as well. So there's a little bit of advantage of me buying a home right now as a first-time home buyer as for you.
Interesting.
Who sold your home and put in a little bit of money down to maybe lower that loan amount.
Interesting.
Yeah.
Okay. Now, because I want to understand this a little better, you're going to get a better rate, or you just won't have as many LLPAs?
The LLPAs are gone for first-time home buyers.
They're just gone.
They're not gone completely. They just not those new
the new ones.
The new ones that are being implemented on May 1st are not going to be implemented towards first-time home buyers.
Okay, so they will be implemented for me as an
else.
existing home buyer.
Yep.
Which means, now, does that mean that we start off with the same rate? I just have more closing costs? Or
there's more cost to you, right?
More cost to me.
Cost to you, yeah. In that sense, increases your rate, because obviously if I'm only paying this much for that specific rate and you kind of want to be in the same level, your interest rate will be a little bit higher as compared to mine, because my cost is going to be lower than your cost.
Okay.
As a first-time home buyer.
Okay, but could I pay that lump sum at closing and get the same rate?
Yeah, you can. Yeah,
okay.
Obviously.
But if we wanted to pay the same amount for the home and put the same amount down at closing, my rate's going to be higher than yours.
Yes.
And what kind of rate adjustment are we talking here? What could it be?
We're looking at I don't know the exact adjustments, but we're looking at a rate increase of a half a point minimum.
Oh, I mean, that's
So
that's
if
something.
So if I'm at a 6.5, you will be at a 7%.
That's not good for me.
No, not at all.
That's not good for me.
It's good for me as a first-time home buyer.
Absolutely.
So, yeah, for sure.
Okay. So first-time home buyer, and so this new program, it is designed to help first-time home
Exactly.
buyers.
It is very much designed to help them.
Okay.
And I mean, the people that are going to be affected are those who are buying a vacation home, second home, right? Investment properties.
They're getting hit a little harder.
They're going to be hit very hard, unfortunately.
So this is a situation, not to get political, but we're going to take a little bit more from those who are a little well off, and to make this program available for first-time home buyers.
Exactly.
Okay.
Yeah,
All
that's
right.
going to help them out. And realistically, in the past, we've seen this LLPAs. I've been doing this for 20 years.
Yeah.
I've seen them go up and down. They change. So in May 1st, we may see this adjustment. Next year, we may see the removal of those adjustments.
Is that about how long you would say that people would need to wait for another change as a year?
No,
it wouldn't be in 2 months, though.
No. I don't know when that happens. They change periodically. So,
okay. Because it's always fluctuating a little bit up and down.
Yeah. I mean, back when, in 2008, for example, second homes didn't have any adjustments, hardly at all, right? So if I was buying my first home, or if I already owned a home and I bought a second home, a vacation home in St. George, for example, I wouldn't actually get hit at all. It would almost be like if I was living in that property as my primary residence. I didn't have any hits, any adjustments at all. Throughout the times, the risk level became higher on the investment properties and also second homes, vacation homes. So that's why now you're seeing these high adjustments on those type of properties.
So people were
defaulting on it.
Defaulting
Yeah.
on a second home, investment property, that kind of thing. And it became more of a risk.
Yeah.
So that's why they've stacked these LLPAs up on. Okay.
Yeah. So and this is all it is. The LLPAs, I'm sorry, are a risk adjustment also based on who you are, your credit, debt to income ratio, type of property you're buying. So they're risk adjustments also.
Okay. So to boil it down, really good opportunities now for first-time home buyers.
Absolutely.
So even though rates are doing what they are right now,
it wouldn't affect them
this
as much.
could be a really good time for a first-time home buyer. Now, is it just on existing homes? Is it new homes? Any kind of home?
Any type of property,
Any type of property, great for a first-time home buyer.
Yes.
Okay, all right. So first time, hey, start the process.
I think right now.
Okay.
And I mean,
because you marry the home and you date the rate.
That's right.
So you can refinance later.
Yeah.
But this program makes it opportunistic to get into a home.
Exactly.
Okay. Now, For the people who it doesn't affect so positively.
Yes.
All right. Let's say someone's thinking about buying a home, not right today. I mean, there's very little someone can do in a week.
Yeah.
But let's say in 6 months. What could they do to improve their situation so these LLPAs don't hit them as hard?
That's a great question. So we're looking at debt to income ratio, right? And so if you have a lot of debt right now, if you have a vehicle that maybe you have a $600 payment, I don't know, an $800 payment, try to refinance, lower the monthly payment to lower your debt to income ratio, or pay it off if you can, right?
Okay, sure.
I mean, the taxes are coming back to a lot of people, so they're refunds. So apply some of that money to pay off debt.
Okay, so pay off debt, get that debt to income ratio lower, better.
Yep, because we want to be below 40%, remember?
Okay, below 40%.
And also your credit scores, we want to be above 780. It used to be 740, where that was the sweet spot for a perfect credit, but now they're raising it up to 780.
So get it up to 780.
Yep, and the way you do it is by paying debt. Credit cards are the ones main factor that gives you a better credit score, right?
Okay.
If you have a credit card that is not quite maxed out, but maybe 75% of being maxed out, pay it down to 30%. Utilize the refund of your taxes to pay off some debt. That will definitely bump up your credit score dramatically.
So your debt to income, your credit score, anything else that would be,
those
could
are the
really
two main
help.
factors
Those are the
right
two
now.
big ones.
Yeah, those are. I mean, and your income, obviously, if you can
More
somehow,
money.
if you can
Which
get a
changes
raise,
your debt to income ratio.
Exactly.
Okay.
Yeah.
All right. Sounds good. Yeah. Well, I think that hopefully clears it up a little more. I mean, there's a lot of just data out there.
Yes. Yeah.
But I wanted to kind of present more of scenarios so people understood this is who it hurts, this is who it helps, and they can then make the best decision for themselves. So,
and one awesome thing is just that if you're a first-time home buyer, you can actually do a soft check on your credit. It doesn't really affect your credit score if we do a soft check. We can see where you're at as a first-time home buyer and get you going.
So run the numbers.
Yeah, run the numbers.
See where you are.
It doesn't affect you because we do a soft check.
Well, I do like that. I'd never want to just give somebody advice. You need to do this right now. But go ahead and investigate it, run some numbers, and then you can make the decision if this is the right time for you to get into a home.
Because you might be surprised. You might be ready now. So
yeah, okay. Well, sounds good. Well, thank you so much, Christian.
No problem.
If you have any questions, you can get a hold of me, and I can give you Christian's information. I'll also put it in the notes down below. But yeah, thanks so much.
No
and
problem.
look forward to talking again about some of these really juicy topics.
Awesome. Thank you.
Thank you.